At the end of this very video, you'll be able to spot out your key levels and also get your traditional buyers, and at the same time align this knowledge with you getting good entries and getting good trades. So without wasting further time, let's basically dive into what I have. So like I explained in my last video, that key levels are those higher time frame lower time frame POI. Those are lower time frame, those are POI, those are order block, maker block, rejection block, OCL, fair value gap, support and resistance, MSNR, whatever form of um form of POI we use to get our entry on lower time frame are basically what are called key levels. On the higher time frame, we don't call them key level. We call them we don't on the higher time frame we don't call them POI. We call them key levels. Those are your POI are called key levels. So now, what are the work of these key levels? These key levels are basically just going to give you the directional bias of the market. Okay, is it going to be buying this week, or this market is going to be buying for the next 2 days? Is it going to be buying for the next 3 days? This is just basically what key levels are going to tell you. Key levels at the same time combining with your lower time frame entry give you a sweet trade for you to know where the market is basically going. For instance, you can basically see people maybe for straight 3 days, 4 days. You can basically see them taking trades in the same direction. You can basically see them taking buys or sell the same direction. This is because they are basically causing their directional bias through the marking of key levels. Now, how do you get this? You go to your higher time frame, like your 2 hours, your 3 hours, your 4 hours, your daily time frame. Any of them is basically where you do where you map out your key levels. Now, I'm going to be using this chart as an example. This is Euro card. Now, first off, I got some nice trades on this Euro card. I also took some losses because you can't just win all trades. Basically, definitely you're going to take some losses. Now, how do I go about it? I scroll up to my 4-hour time frame. First of all, my 4-hour time frame. Then I saw this candle, this green candlesticks. Although you see people talking about that your order block is this order block on 4-hour time frame. See people saying your order block should be marked from the last opposite candlesticks because which cause an important move. So this last green candlesticks are map out. If you go to 2-hour time frame, you basically see that it's a clearer order block. So what I'm trying to say, if you see a kind of candlestick like this on a time frame, you go to a much lower time frame, you see that they are order blocks. They are clearer. They are more clear order block. Now let me go to my 2-hour time frame and see what you can. So you can basically see what I'm trying to like explain. So you can basically see that the order block is more clearer on the 2-hour time frame marking from there, and you can basically see that this order block is a very sweet and good order block to take your trade from. But then we don't want to take our trade from higher time frame from this 2-hour time frame. We basically want to use confirmation so as to like follow the trend. Now you can see this sweet liquidity here present and this other block present. Now price did what? Price expected this 4 hours or 2 hours order block, whatever you call it. It was giving us to the downside, and it basically tapped into it. After tapping into it, it started rejecting. Now what are you supposed to do to get a sweet trade? Now you're supposed to go to a lower time frame, your 1 hour, your 15 minutes or 30 minutes. But basically I mostly use 15 minutes and 30 minutes. So what I do, I scale down to my 15-minute time frame. Why am I scaling down to my 15-minute time frame? I'm basically looking for MSS or change of character, whichever one you call it, market structure shifts or change of character. Now I basically see market was basically creating big structure to the downside, trying to approach our POI. And you can basically see this big structure, this large big structure here. Sorry, this big structure here. You can basically see it here. The market broke structure. Yeah. Then you can see this last big structure here. This last big structure to the downside here. Now, then you can basically see another big structure to the upside here. and you can see market taking out this eye, which was this last week or so to downside, as a change of character, or MSS, that market structure shift. This because is a change of character here. Then you can basically see that market was giving us this because to the upside. So that's how I basically know if market is still going to my intended direction. I don't use trend line header, I use break of structure. Because basically market is still breaking structure to the upside. So if you are watching this video now, you should be expecting more buys on Euro card. Now, these are some of the buys I took on the market. Let me just now I can basically see market tap into this forward order block and give us market structure shift, which is what I'm basically looking for. And market one cloud. Then I use this injection block, this long wicks. Yeah, that's what I basically use. I use this long wick. And another thing I want you to notice is this long wick on higher time frame. You go to much lower time frame, you see that they are basically clean order block. This rejection block like this long wick, you see it on your 2 hour time frame. If it's close to your 1 hour time frame, or your 30-minute time frame, or your 45-minute time frame, you see that they are clear order block. Now you can basically see this rejection block on 15 time frame. If you go to a 5-minute time frame, it's a clear order block. Where is it? This is it here. You can basically see that it is a clear order block on your 5-minute time frame. So this is the first buy I got here. This is it. And on the my inducement basically present. This is my first pullback. Inducement present. Then I place my buy to there. Target this next eye to have another big structure to the outside. Then my low below this, my stop loss below this way, because my basically came close to my stop loss, but later went straight to my TP, giving me almost 5 hour profit. Now after them, since market has created this structure, and on my 4 hour time frame, what am I expecting? Yeah, I'm expecting market to take out this entire high. This is the entire high overall bias of the market. This is what I'm expecting overall. Market to basically tap to take out this high first. But then I won't just target that high immediately. I'll just be taking it. First of all, I'll first expect market to take out this high first, my higher time frame. That's why I said to map out your key level is very, very important. And to get your additional buy is very, very important. This first nearest zone liquidity. So that I won't just be buying blindly. I'll know why I'm buying. I'll know where I'm basically buying to. So I'm buying to this point first. Then after then I'll know what to do next. Now there is another opportunity here. After the first one we got here, I took another buy, but which ended in loss. Basically took another buy. Sorry. I think I use this other block here. Other block here as a re-entry for it. I think this other block here, yes, for it. Yes, then this low as my inducement protecting the other block. So then my stop loss here, this is what I basically have added then on this particular setup. Then I was targeting this high next as my big structure to the upside. Then you can basically see market respected it first to move, then gave me a stop loss. Then market came to respect this very other block here and use me as use my POI as inducement. Market came to use this very other block here. Although I wasn't expecting market to come back here then, but I saw that my POI has already created equal lows liquidity. So just did an inducement, and this as the inducement for it. Inducement and as inducement, basically you can't basically just win every trade. There are some trades you win and there are some trades you lose. And you can see the first trade is basically 5 RR, and the second one is, and this one is the minus 1 RR. So basically markets came back to this period and actually went to full take profit. And most of the time I do big construct, I do BE after 2 RR or 3 RR max. So my stop loss below the other block here, then market gave me almost under 5 RR. I went to full take profit. Like I said, since the market has been buying. You can see another buy opportunity. I didn't take this. I didn't actually spot this earlier. But you can basically see another buy opportunity. This other block that market use, the other block. This to pull back here as the investment for it, and markets keep on buying. So overall, what am I expecting on the euro card? I'm still expecting markets will keep on buying. I basically see okay, keep on buying, and that's just basically it. So just keep on applying this same knowledge to your market, and you see that it works on every market. You can see basically see price already approaching this. Our first take profit first. Where I'm targeting first. So that is basically it. Just I don't want this video to be too long. I'll look for another example and drop another one. That's basically how you can basically check your directional bias. Since I've gotten my directional bias, I didn't have any reason to start selling. But I've been doing to be sell. I'd rather be a scalp and to be dangerous because I'm basically going against my directional bias. So what am I supposed to buy? I'm supposed to be buying. You can basically see this buy. I keep on buying. I can even see a more percentage of 5-6 buys to get your take profits. So thank you for watching the video up to this moment. Like, share, subscribe, and see you at the other side.